See you, man.
See you,
Johnny's
buddy.
just the best, isn't he? He's just absolutely the best. He best teacher, baller trader. Man, thank you so much, Johnny, for holding the fort down, man. Now you all get to put up with me for just a little bit. Dang it. So this is what I'm currently watching on SPY. Okay. By the way, I am going to look for some credit spread setups as well. So on SPY, we've got this little hourly channel here. So on a bigger time frame, we're following this channel really, really nicely. We're right on top, which makes me believe we probably have another push down to the low of today, maybe even further to go this week. If we break out and close above it, then that'll probably lead to a little bit of a bull move. Let's make it rain. Yeah, man. So what's up, Rob? It's just sit back and wait mode, right? This could easily start rampaging up. We've rejected off of this 10 EMA. It's a little bit hard to see, but there's your 10 EMA, that little shadow gray. Get below this area there and it is gone. So this is kind of a little neckline. And now let me show you on a smaller time frame what I'm looking at. Okay. And by the way, this could go higher, but we've got a beautiful double top. We've got a left shoulder, we've got a head, and we might be working on a right shoulder. I see this little trend line moving up through here, right? So are we going to keep squeezing that? If we break down on this and start to move lower, if we measured out this head and shoulder here to the top, down to the neckline, and then we take that and we take it from the neckline down, it takes us right to the low of the day. So if we do get a close below this neckline right here on this orange line, if we get a close below that, that's where we're most likely going. High probability that this is where we're going. So now how can we make money on it? Well, it's a great question. I am not sure exactly. We have to wait and see what the setups are. But one thing I do know, I want the confirmation. This was too screwy to just jump in on, right? I don't want to just buy. Normally I buy the right shoulder. So whenever I get this left shoulder, the head, it comes down and I start planning the right shoulder. It blew right through my spot that I wanted and just kind of been messing with everything. So because it's messy, I didn't end up pulling any trigger on that. Now I'm just waiting for it to break the neckline, which is down around here. Okay. This blue line is a pretty significant drop on an hourly chart as well. But really it's going to be in this area, right where my alert is. If we can get a candle close below that, it's probably going to chill for a little bit because that would be already a pretty large move. Chill and then move down. Okay, so that's the case for the bear side. We have a game plan of what we're going to be looking at doing. It all depends on where it breaks, how long it takes, et cetera, et cetera. But with power hour upon us, we're going to need this to make a move pretty quick. If it doesn't want to and we start closing higher, then 451.55 is probably on the cards. It's in the cards. Okay. So that is possible as well. We have broken some of these hourly moves, right? If we go to the futures here, we haven't done that on SPY yet, but if we go to the futures, we've broken it. Yeah. So let me get rid of some of this crap here so it's easier to see. Excellent. That's from earlier. So we have this really strong hourly trend here, and it doesn't mean that we can't make a pull down. I think a bounce is probably getting pretty close. We've made a big move this week so far that today it all depends if we hang out below some of these EMAs. Sorry. If we hang out below some of these EMAs and kind of close below that, then this might have just been a small little retest. You can see now how it's starting to build a little flag coming through here. We break down on that, it should lead to some selling. We'll see. I don't personally believe SPY's hit my target yet. If I go to a daily chart here on SPY, we've in fact just broken below the channel. We've closed below the 20 EMA yesterday, which is a very, very big deal. And then we've just retested the EMA from the bottom side now, and this could start to roll over. And I personally think that this week we're going to work our way to 444. Or this gap fill. Somewhere in this box is where I think that's too big, right there. That's where I think we're going to get to this week before a bounce comes. Do we have to? No, we could bounce back up, right? We've got a gap up here. It could slowly start grinding its way higher. If it does, I'm buying more puts to take this thing down. That's my game plan. Really, the line in the sand was 452, and we crushed that yesterday on big time volume. A little bit of a retest. Again, this has been a large move so far. And then we gap down, just makes sense to get bought up. So large move down, get bought up. And now the question is that the retest is coming in. Are we going to roll back over? Right? Is this hourly chart here just going to do an S curve and push right on down? The channel on this guy is absolutely perfect. So I imagine probably one more, since this is really the first touch up top here, probably one more dip and then start going. And that would bring us right into that 444 mark, which is, that's where I want it. That's where I believe we're going to start going bullish and start to get the bounce. So are we correct? No idea. No clue, but it'll be the first step of that whole hypothesis would be a strong close below this orange line. Below the 50. Down here, is this what you're talking about? Johnny, Ringo, below. Yeah, we could go to the 50. I think this is a very strong support right in front of it. We might be going to the 50 because that would fill the gap. So maybe down into here, but somewhere 444 to 440, somewhere in that box is my buying spot. Okay. So if I kind of just drew this right through here, I would say this is where your bull should be at. Right there. Anywhere in here. Once we get into this green box, start looking for bulls. And that would mean a rejection off this top line, probably a visit the bottom line, and something like that. Before Apple and Amazon get wrecked. Yeah, I mean, we are way up there on those guys. By the way, Chewy is one I want to do a bull put spread on. I just need this to pull back a hair so I can actually get paid on it. I'm keeping a close eye on that. Apple, you know what I think is going to happen on Apple? I honestly think that we're going to get a gap up. Well, who knows, right? It's so hard. You can't guess earnings because they could crush earnings or get crushed and still gap up, or still gap down. It's all about the projection, and we don't know the projection yet, right? We can make guesses. That's why if I'm going to play anything over earnings, it's me selling options. I don't want to be buying options. It's a bad play. We talked about that yesterday, right? You can make money on it, but golly, there's easier ways to make money than to buy puts, right? Because those puts are going to cost 3 times the amount they normally cost, simply because earnings are, is it tomorrow morning or tonight? Which one is it? Not sure. But I think Apple could gap up into this trend line or into this 10 EMA up here somewhere. And if it does, that's where I'm buying puts, right? If not, Apple's going to come down to 186 and then it'll bounce back up to 195 and then it'll go and then it's going to die. So that's what I'm looking at, but we are crazy extended. Correct. Options get more expensive as long as that expiration is over earnings. And the further past earnings you have, so let's say earnings are tonight. If you buy them that expire in 45 days, you'll pay a little premium, but really that's not going to affect you that much. It's mainly the expirations, like this Friday is through the roof. Next Friday, through the roof. The following Friday, high. The Friday after that, not as bad. That's kind of the curve that you'll see with the pricing of options. Buying tomorrow's expiration is just, you might as well sell whatever thing's valuable to you because it's going to be expensive. I was going to say something, but I'm not. So it's up there. It can look, it's not necessarily going to, but you can see a spike in implied volatility there. It's really, is that week facing, inflation reports? Is that, because that, the third week is the big, that's your expiration for a huge number of what SPY's dropping. That's your expiration for a huge number of options. So you can see volatility there. It's just not a guaranteed over earnings. it's going to spike no matter what. Like, it's happening. Okay. So one thing we got to pay attention to, this is a lot of bear candles in a row. This will probably fall pretty hard. Scenario number one is definitely happening right now. It is going below the area. It's breaking below everything that we wanted. This little channel has perfectly played out. Now we need a candle close, and we're going to need it to consolidate. It needs to go sideways. It's already made a large move. Okay. So it needs to just hang out. If it just dives without us, then so be it. Remember, our expected move is down to the bottom of this. 447.68. That is the expected move from what we're looking at. Okay. So I'll put a little line there. This is our target. This is where it should get to. Now, will it get there before market closes? I don't know. But so far, we've read it like a book. Now we need to find our setup. We need a strong close below all of this. And technically, it could even be this blue line at 449. That's going to be the breaking spot, because that could be the actual neckline. Just remember, that's already made a big move. This is when all your bears are loading into puts, my friends. You have to realize that options have supply and demand. It's not just trading. You're also playing a game within a game. Right now, what is everyone doing? Everyone is buying puts. Everyone. Buy as many puts as you can, right? No. You don't want to join the crowd. We've got 4 bear candles in a row, huge move down, breaking a very pivotal spot. We should have lots of volume on this candle. Everyone is loading into puts, which is doing what to the price of puts? Well, if this put right now cost $1 and you put an order in for $1 and it doesn't fill you and it goes to $1.02, and you put an order in for $1.02 and it doesn't fill you and it goes to $1.04, and you put an order in, you see what I'm saying? People are chasing it. So this might be $1.20 when realistically it should cost like $1.04. And it's $1.20 because everyone's loading in right now. They don't care the price, just market order in, you're loading in. So as soon as this starts to bounce some, what's happening? Well, all that demand, everyone that's buying puts right now, just watch the price. Let's look at this. We're going to look at probably the 450 strike puts. Okay. So the 450 strike puts on SPY that expire today, they're $1.40 right now. We'll pay attention to what happens to the price. As soon as this starts to bounce, you're going to see everyone that got into puts here thinking it's going to die, and it might, but it's trying to. This is a very, very strong break. As soon as this thing starts to bounce up, that $1.40 is immediately going to go to like $1. And then it's going to go to 90 cents. And then it's going to go to 80 cents. And what's happening? Everyone that's loading in is getting burned, and they're trying to get out as fast as they can. And the inverse happens. So the crowd can be right 100%. But the problem with trading with that mentality is if it's not perfect, you get crushed. This has to keep tanking. If it even bounces just a little bit, you'll lose 20, 30 cents on those options. We're watching it right now. Is that $1.43, $1.44? Now it's $1.40. As soon as this starts to bounce up some, you're going to see those option prices crash. And 10 cents is a big deal. You have a stop, but that's the problem. You're getting stopped out for no reason. This is not bullish just because it's bouncing. Right? Just because this bounces a little bit doesn't mean it goes bullish. You have your stop in the location where it's no longer bearish. You don't just put a stop, you don't just like get in here, stop right there, because what's going to do is it's going to fill you and it's going to stop you out for absolute no reason, because then it's going to go down later on. Okay. So you want to trade and realize that right now is very, very expensive to buy puts. When are puts not going to be expensive? On a retest back up to here. Has this changed anything? No, we are still going down. It's going to retest to here somewhere, and then it's going to roll over. So why chase this for the 5% of the time that it never pulls back? Because 95% of the time, no matter how low this goes, you get a pullback. So instead of playing Russian roulette of like, man, I'm going to buy this very, very expensive and I just pray it continues, because if not, I'm going to get crushed. This is a great short trade, except for the fact that it's already made a big move, which means there's a high probability it's bouncing and then it's going to go down. Maybe not, but I am not a professional trader is always about their risk. I don't care about missing the trade. Who cares? If this thing leaves without me, who cares? It's not about making money. Everyone focuses on making money. The best traders, there's a reason why 90% of the people that trade do not make money over 100 trades. They can make money this month or today or this week, but over 100 trades, can they actually keep their money? The difference is the professional traders know price action. I'm looking at this. This is telling me the direction that we're getting ready to go. Oh yeah, I had a line here. It needs to close below this to fulfill the head and shoulders, but that doesn't mean I get in. It's made a big move. You got to see the whole picture. So now it's a retest. Buy my puts up here when they cost 90 cents instead of $1.40. And I'm getting a discount. I'm adding 60 cents of profit. Per contract is $60. You do 20 contracts or 100 contracts. That's a lot of money simply by buying here. So as soon as this starts to bounce, then this is where I'm planning my entry up here. This is where I want it. If it doesn't ever get there, so be it. I'm not chasing this. Why? Because I can't risk. My stop has to go up here. If I get in here, that means my 1R is there. So let me give you this example. Sorry. I'll give you this example. The best traders in the world are making 2 or 3R when everyone else is making 1. So everyone that chased right now and got in, their 1R target is at my target down there, okay? If you keep your stop where it needs to be, this is where you're wrong. Not right here. You're still bearish right here. We're still bearish right here. We're still bearish right here. We're still bearish right here. Still bearish right there. Your stop can't go anywhere of these places, okay? If you just moved your entry up to where it should be, you turn that 1R trade into a 2.4R win with the same risk. So technically, I'm risking a lot less. The downside is I might get missed on this trade. I don't want to be in it anyways. It's not worth being in this trade because if I get in this trade, how much money am I really going to make? Maybe 1R? You can't survive on 1R. The way to be different in trading, the way to be successful in trading is figuring out how, this is what everyone's doing. The 90% of the people that trade that suck, they're getting in right now. Oh my gosh, we broke the neckline. We did. Totally did. Yeah, this is a great breakdown, but this is not telling me to get in. This is telling me what direction it's going to go. This is telling me we got an 85% chance of going lower, but it doesn't mean that that's my entry. My entry is up here. This is my entry. This move is telling me where to go. This move is telling me to get in, and then it's going to roll over. So when everyone that just bought these options, everyone that spent $1.50 or $1.60 on these options, when it comes up to here, they'll be like 90 cents. They just got destroyed. I'm buying at 90 cents. And then when it comes back down to here, guess what all the noobs are going to do again? They're going to load back into puts. What's going to happen? Those puts are going to be worth $1.50. If you buy it at 90 cents and this thing barely even moves, I'm going to almost double my money. Wow, who'd have known a bounce was going to come? Those options are now $1.17, $1.10. They're getting destroyed. You lost 40 cents in that little baby move right there. This is where we want to get in, not here. I'm buying today's expiration. This is a day trade. So I'm buying today's expiration. I'm doing the 451s, the 450 strike puts. And on SPY, you can mark it in. It's like a 1 penny spread. On anything else, I wouldn't touch it. Don't mark it on options unless it's the SPY. Everything else, never mark it. You'll get crushed. Yeah. So why didn't I buy it right when it broke this? Because it's already made a big move, and I understand how markets move. Markets move, bounce up, and come back down. You're talking about this one up here. This blue line, because this is not confirmation yet. It has to break this neckline down here. It could come to here and bounce. This is my confirmation all the way down here. So I had to wait for it to close. Then I come back in and I grab it there. And I have my confirmation and almost the same entry. And then it goes. How do you measure if an option is a good price or not? that's harder. You can go back and look at TradingView doesn't have the price of the option on there, the option chart, but you can go back to an option chart and it'll look just like this, except it's always bullish, right? It's always going up, but well, I guess it's going to look just like this, but the value of your option. So even if you bought a put, that put's going to be going like this when it's increasing, right? Even though we make money as the stock goes down, it's charting the value of that option. Yep, totally. Yeah, you can chart options in Thinkorswim, in TradingView, and any broker. Just TradeStation. TradingView doesn't chart options, as far as I could tell. If you guys know how to chart options in TradingView, let me know, but I'm pretty positive they don't hold it. So everyone just lost 50 cents on those puts. They bought it right here. It was $1.50 when it was right here, or $1.45 when it was right here. It's currently at the exact same spot, $1.10. It's at the exact same spot. How is that? People are literally, you buy the put right there and it goes back to your buying spot and you're down 50 cents. You're like, how is this possible? Because you bought it with the rush. This option should have only cost about $1 right here, and you paid $1.50 for it, or $1.60, right? Because you bought it when the whole world was trying to buy these. If you just understand how markets work, you get to move down, you get to move back up, then you get to move down. Maybe not. Maybe this thing just drops. If that's the case, again, it's not about how much money can I make or missing out on money. It's about my risk. But by the time you wait for confirmation, the move already happened. Oh, I shorted this thing right here. This was my trade of the day right here. I shorted this. I have charts posted on Slack to prove it. I shorted it right here, and we took this thing all the way down to here, and then we exited. As soon as we stopped going lower, we got out, and we were going to get back in looking at this head and shoulder. So I've already made my money on that. And now what I'm looking to do is see if I can't get back in. The reason why I don't want to stay through all of this is because theta eats it up. So I do not want to hold through all of this. And then by the time it comes down to here, I'd be up the exact same amount of money I was right there. All right. So now we're coming back into our buying spot. I'm kind of looking at the 10 EMA. So it might be this trend line, this blue dotted line that we reject off of. I'll watch and see it. But currently those options are 55 cents cheaper than they were right here. That's a big move to in there. Ideally, I want up here though. I want that. We might reject off of this. And again, I could go down here, but now I'm only making $1.79 in my risk. If I get in up here, that's a difference between a 1.79R and 3R is right there. I don't care about 1.79. I want 3. I'm getting in up here. And then the cool thing is that if it doesn't immediately work, we're at the spot where it should go lower. Down here, it shouldn't go lower. It should bounce. So if you get at the spot where it should go down and it doesn't go down, you can get out. And now you're able to control your risk even better. Pam, yep, I bought puts earlier. Yep. Okay, we're at the trend line. This can be one of the short spots. And again, if it misses me, it misses me. I don't care. In order to be successful long-term in the markets, you have to just get your best setup. And it's probably going to hit this and drop. That's probably what it's going to do. That was a very strong close. But again, if you can just learn, guys, I teach how to read these price actions. Just that one little move right there that I told you, that move down, move back up, go lower. I teach that. If you want to learn how to do that, email me. Tony@reallifetrading.com. Let's see if it can get there or not. And this is where I'd pull the trigger on it right there. And again, if it leaves without me, so be it. I've already made lots of money today. I don't need to. I'm okay getting missed, because again, I'd rather have 3 R's compared to 2 R's. That's an entire R difference just right there in that move. An entire R. You've got to win big and lose small if you want to stick in this game. And this is one of the easiest ways to win big, is when everyone else is getting 1 R, I'm getting 2 Rs. When everyone else is getting 2 Rs, I'm getting 3 or 4 Rs. That's how you win big, by doing the exact same thing. It's the exact same move as everyone else. The difference is, instead of buying it here, I bought it there. That's it. You can easily do this kind of trade. One put cost $100. You could buy one put. The worst thing that can happen is you lose $100. I wouldn't let it lose $100, but you could totally do this trade with $500. And if you're right, you're going to make $300 to $400. Correct. These are today's expiration, the 450 strike puts. My friends, this is a very large move. That's why we need to let it retest up some. And if we start getting up above this, I know I'm wrong and I can start trimming off. If I get in here, I now have to wait for it to get all the way up to there in order to figure out if I'm wrong. If I get in there, I have a very small room to be able to figure out if I'm wrong or not. That's how you lose extremely small. Lose extremely small, make really good moves. And again, this might just crank out without me. So be it. Then I would not trade. Yeah, it's, if you need that money to go do a funded account, because my friends, there's no guarantee this trade's going to win. Just because I say it, I have no idea if this trade's going to win. I plan it, I have an edge, I have a high probability that it should move down based on what the charts are telling me. But there is no guarantee this wins. If this comes up and bounces, then I'll lose, right? So that's another thing too, is it's all about having an edge that gives you a 50-50 win rate or a little bit higher. And then when you're wrong, you lose small, right? When I'm wrong, I'm losing 0.3. When I'm right, I'm making 3 Rs. That's all trading is. Don't try to be right and stop trying to avoid being wrong. You'll just lose stupid amounts of money. This is a really good consolidation. So if we go sideways on the bottom of this trend line for another 5 or 10 minutes, then I will probably grab it off of that, but I would have to change where my stop is to give myself that same risk. That's only if it consolidates up here for 5 or 10 minutes. Another thing is, we're getting very late in the day. We're getting right up to my cutoff point where I no longer get into trades. So expires in 30 minutes and I'm buying the 450 strike. This late in the day, you want to buy options that are already in the money. If you buy options out of the money and this thing kind of messes around for 5 or 10 minutes, you're going to be destroyed. You're going to lose all the value of that option before the strike. The price doesn't have to go anywhere. So that might have been it. So now my 10 EMA is getting drug lower. So again, if this comes back up to that 10 EMA, I'll get in here, but I'll have to adjust where my entry is. And I might just go, didn't get high enough. Oh, well. Hopefully this will bounce up here in the next candle and hit my target or hit my entry, and we can get in and then just see if it works. Good times. Tesla doing something fun. Oh my gosh, sorry. I gotta sit in front of the keyboard. All right, Tesla looking a little bullish. This looks like it kind of wants to go up some. We'll see if it's just a trap or not. Oh my goodness, are we gonna come to my entry? If we gap below this buying candle today on anything, look out below. 100% agree. 100%. 100%. And it all depends on how this candle actually closes, right? Because I expect us to come up to here and then probably have a pretty weak close. But If we gap down, just know also, if we gap down, we're going to 440, right? It's not like we'll go down to there and then we'll bounce. So, but that would be an amazing day trade. Oh, tomorrow, if we gap down, man, what's my cutoff for 230? This trade would need to work pretty dang quick. That would be my cutoff. I mean, I'll give this 10 minutes to start moving lower. If not, then I'll cut it. Okay, so the 450 strike puts just hit my target to get in. Expires today. What the heck is going on? There we go. Correct. Okay, so I am filled on these. We were patient. I bought them for 94 cents. Didn't I say they'd be worth 90 cents instead of $1.55 or $1.60? Now this thing needs to work. If it does not work, I will be cutting it. I will start exiting half. If we start getting some candle closures or moves up above that 20 EMA, I'm getting out of half. This late in the day, it needs to work pretty quick. We're getting in at the spot where your bear should be at, right? It can go a little higher. I'm not that great where I just perfectly nail the top. So that's why I'm giving it a cushion. But really, up above any of these in here, it's not working. And I can just get out. I can lose 0.3 Rs, right? My 1 R is up there. So come up to there, lose 0.3, 0.4, and be done. I've already made a couple Rs on that initial double top. It's a green day. And if this trade works and pushes down, cool. I can go ahead and kick my stop right to my entry. Lose small, win big, right? Okay. Got those guys pretty much at break even right now. Let's see what happens. So the heck is going on here? Okay. I want to make sure I have, okay, good. Come on down. So now if I'm going to put a little alert up above this guy here, this 20 EMA, if we get up above that with this rejection, I'm exiting half. Well, you could be buying Q puts, just know we've already made a large move. It's the same exact thing, right? Qs are like buying puts down here after this move. It could gap down, but it's already made a big move, which means most likely we're going to get a little bit of a move up. Then you buy your puts, then you roll over. But if we gap down overnight, then trade it then. Yeah. I don't want to guess what the stock market's going to do. I don't want to guess that we're for sure gapping down because there's no for sure. We could be gapping up pretty large tomorrow. So I'd rather just, no, I'm not guessing. I have an edge, right? What I'm saying is on the Qs. So if I go over to the Qs real fast, my edge on the Qs is not there. This has already made a large move down. So if I bet right now that this thing is going lower, where's my risk at? Where's my stop? If Qs work their way back up to here, then I have a better risk reward compared to all the way down here. If this thing gaps up, I'm losing a lot, right? If we're getting in right now, my stop has to go up here, which means my 1 R target is all the way off the face of the earth. Is SPY dropping? Kind of. I got to turn off this dumb alarm. All right. So I can move my little alert down now. We should not be getting up above that. If we do, then I'm closing out of half. And it doesn't matter if it rolls down later on. I've got to protect my risk, right? So let's get back to Qs real fast. If I get in right here, I make 1 R all the way down to here. If I get in up here, that's 3x my money compared to 1x my money. And I have a gap fill up there. This is what I'm talking about. Yes, it's a guess, but this has an edge with a better risk reward. Does this have an edge? Sure. but it's already made a big move down. It can go lower. Totally. I agree with you. If we gap down tomorrow, this thing is crashing down. 100%. I'll day trade it. I don't need to try to guess overnight, because overnight, if we get the gap up, I'm getting crushed. I would rather just see what happens and come down, and then I'll just day trade and make just the same amount of money day trading on the way down to there than I would trying to guess overnight what's going to happen. So that's just me. Now, again, could you do this? Yes, but how much money are you really going to make? Well, you could load the boat and put your stop here, but again, if it goes to there, you're still bearish. It's still going to come rolling over. So you're losing money for no reason. All right, come on, SPY. Like we said, this thing's got 10 minutes to start to work. This candle needs to be making a move lower in the next couple minutes here. I'll give it one more candle after this. These are 5-minute candles. If not, I'm going to start trimming off. I am currently up 2%. What is the box you put on called? I haven't been able to trade them all. Is it a fit? This one right here? Or the buying kind of area box that I used before? Type in a 1 if it's this guy right here. Type in a 2 if it's another box. 1. This is your risk, whatever it's called, long position, short position. Just click on this little guy right there, and you can select it. And it just calculates your risk for you, right? So it's taking the distance between here, and it calculates the distance based on that. All right, so we bought options at 91 cents. If we can get down to here, they'll be worth $1.50. If we get to here, we'll have doubled our money. And if we get to here, 600%. My entry price was based on really, yeah, around the 10 EMA, but also just this resistance right here. I saw kind of this resistance here, and I was like, that's probably a good spot for it. So now officially I can move my stop down to right there. I don't have a physical stop, by the way. It's just me pressing a button. I am the stop. It's not like I'm going to get up right now and go watch TV for an hour or something, right? I am in front of the computer. If you're going to leave the computer for any time, if I leave the computer for any time, I put a physical stop in, because in 2 seconds, this thing can go to the moon. You do not want to be like, oh, my alert went off and come down and then have it up there, and that sucks, right? So I'm going to move this thing out of the way so we can actually see. I'll just move it sideways. There we go. Come on down, baby. Let's go. So now what are people starting to do? How many people were buying puts up here? Nelson was. At least 10 of us were. Everyone else was getting out of their puts. They bought their puts for $1.60 here, $1.45, $1.60, depending on where. And by the time it got up to here, they had lost almost half. They're like, screw this. I was wrong. I thought we were going to zero. And then they get out, and I'm the one buying it for 90 cents on a discount because everyone's trying to get out of their puts. So it artificially pushes that price down. Now that we're going down, everyone's thinking about puts again. And they go, ooh, I want to buy some puts. We're going lower. And they start buying it, which increases the price, which then I can double my money by the time we get to here. Make sense? That's how you play options. And by the way, there's no guarantee that this trade works. I'll say that time and time again, but can I lose small on this? Yes. So I currently right now have a 0.1 R, 0.01 R risk, and I have the opportunity to make 3 or 4 Rs. That's how you crush the stock market. Again, not that I'm going to win on this trade. It could bounce and lose. The reason why I said that is when I'm wrong, I average 0.3 R loss, 0.3, not 3 R, 0.3, almost break even when I'm wrong. When I'm right, I average 2 to 3 Rs. Because I got in right here and I know exactly how much those options are going to lose. I've been trading options long enough. I got in at a really good price that I'll probably lose 5 cents on that option. My 1 R is the price of the cost of those puts. So I put $1,000 worth of puts on this. That's my 1 R. That's what I trade with. Day traded $1,000. I will be down maybe $100 right there. I'm going to lose 0.1 Rs. That is a great candle. So we asked for this candle to make a move within that 10 minutes. It did. We keep holding. Now, when this thing comes down into this spot right here, When we get down into like 448.86 and it starts to make a move, I'm going to start trimming off just some. We do. Yeah, you can find it right on YouTube. Yep. So if you, let me get rid of this little line here so I can grab this thing and move it down. I don't want it up above this trend line anymore. So if you go to reallifetrading.com and you go to your account and you go right here, search YouTube, R system. I think that's what it'd probably be right here. You got all kinds of stuff, maximize trading profits, everything that talks about the R system. That's the one I was looking for. The R system explained. I'll post this link. Yeah, I am. Here, I'll post this to everybody in case you are interested. There's the R system explained, baby. Come on, SPY. Let's go. Anytime. Again, if you want to learn how I trade and how I read the charts, all I'm doing is reading charts. It's not a strategy. It's not, all I'm doing is my strategy is buying puts. I have a strategy for buying puts on a day trade. That's my strategy, but I had to diagnose the markets first. You can't just be successful with just a strategy. You have to be able to diagnose what the markets are doing. If you exercise my put strategy, day trading strategy right here, you're going to have very different results than me. Why did I get in here when everyone else got in here? Everyone else is going to lose an R. If this thing bounces, they lose an R. I lose 0.1. Let's be generous. I lose 0.3, which we're not going to. I lose 0.3. You see the difference? When I'm wrong, I lose almost break even. When everyone else is wrong, they lose an R. With options. I'm talking options right now. If you did shares, your stop would be up here. That would be an R. I bought the 450 put, Natasha, and I got filled at 91 cents. Come on. This thing's got to go lower here. So now what I'm starting to see is I'm starting to see this. Does that mean it's going to go all the way out? Where's the end of the day here? This might not move. Dang it. We're going to need to see a breakdown on this in like 5 minutes. If this is not taking out that low, I'm going to start taking my profits. I'm up 20%. So if you want to learn how to diagnose the markets, I always say this, right? But if you get in your car and your car doesn't start, you don't just go grab a pair of pliers. Like, you need to know what the problem is. If you pull the hood and realize your battery's dead, then you go and get the tool that you need to take the battery off, right? And some pliers, some wrench, whatever you need to take the battery out of the car and switch it. The tool is not the thing that's fixing the car. Your diagnosis is the thing that's fixing the car. The tool is what's helping you to fix it. Strategies are just tools in the market. You have to have strategies in order to make money. But the problem is people just get a strategy and they don't apply it at the right time. They don't read it. They're going bullish when you should be going bearish. They're going bearish when you should be going bullish because they have no idea how to diagnose what's trying to happen. We talked about this scenario playing out, what, 40 minutes ago? We had a diagnosis. We were prepared for it. We were ready with our entry before any of this ever came down. And when it came down, we followed our plan and got in because we diagnosed the markets. This was a large move. It could have kept going, but it made a lot of sense for this to retest. And that's where we can grab it and move down. Why 450? Because we're at the end of the day. So if you buy the 430 strike puts, you're not going to make any money. You're going to get crushed. SPY's not going to 430 today. So your option has to be deep in the money by the time it hits my target. My target is right here. And because we're so late in the day, this thing's got to start moving here like now if I'm going to stay in this trade. Because we're so late in the day, I went ahead and bought it already in the money. So it's going to act a little bit more like the shares. Because if this decides to do what it's doing right now, and I would have bought the 448, I'd be down. There's 0 DTE puts. Yep. I'd be down. So if I bought the 448 strike puts even though it's below my entry, I'd be losing money right now. I'd be down. Instead, I am up 22%, which reminds me, I'm probably going to start taking off some. So this thing's just taking way too long. And I don't care if it goes lower. If it doesn't start rejecting here, I'm going to go ahead and take off some here. All right. So I want to make sure that's on the right thing. I'm taking off 10% right now. I'm running out of time. There's only 15 minutes left in the day. And if this thing bounces at all, I'm going to start giving up some of my profits. I'm up 30%. So that's $300 in 15 minutes. I'm going to go ahead and get out of another 10%. And if this doesn't start working, I'll just keep doing it. I'm getting out of another 10%. With options, you can't be patient like you can with shares. With shares, just write it out. With options, I said, I need this thing breaking down in a certain time period. And I don't care if it starts to die now. I don't care. I'm still in 70% of my position. If it expires without me exiting, if it expires in the money, which these ones will, I bought the 450 and they're put. So anything below 450 will get exercised. You will be short shares by the end of the day. So now I'm going to kick my stop down to here. If we get up above that, I'm out. So yeah, you want to close out before the end of day. That's why I want this to work, because I don't want to hold on to this thing by the end of the day. There's a lot of people that would buy it. And that's one thing though, is you don't want to get out like a minute before market closes, because it might be a little hard to get filled, but SPY is so liquid, you'd be just fine. All right, I'm getting out of another 10%. So I've locked in a guaranteed win now. I'm up 20% at the moment, 18% at the moment. I'm getting out of another one. I'm out. I'm out of all my position. That last one did it. So I made $287. Could this go without me? Yeah, but I don't have the time, right? Good job, Pam. Way to go. That's what I'm talking about. I don't have the time because this should have been working already. And within the last 10 minutes, so in 2 minutes, this king is probably going to go and pop up, because that's what happens in the last 10 minutes of the day. Make sure I'm out. I'm out. That was an easy $300 almost dollars. And if it goes without me, then so be it. I've got to follow my plan. Because I can tell you a handful of times where it does that, and then I lose the money that I was up. I gave it a time frame when I got in. I said, within 10 minutes, this thing needs to be breaking down. It didn't do it within 10 minutes. Now, if this was the morning time, I would have waited, right? Like earlier today, I was in those puts for a while, probably 30, 40 minutes. I was patient with it, although it worked right away. But this late in the day with options that expire in 10 minutes, remember that expires in 10 minutes. You don't get the luxury of like, let's just see what happens, because that $300 is going to go minus $100 within 2 minutes. So it didn't do what I wanted it to do. It should have hit and dropped, and it wouldn't. It spent 20 minutes just going sideways. So take your $300. Cool, right? This is how you day trade options. Again, if this was early in the day, I would still be in my full position. I would have done the exact same thing. I just would have been a lot more patient with it, because I have 7 or 8 hours, right? I have 7 or 8 hours for this thing to work. This late in the day, one little pop and you'll get crushed. And usually that's what happens late in the day. So sorry, I'll take my 300 and move on. Let's check on the Qs. It looks like Qs are going to have a nice bull day. If we gap down, that is a day trade and a half. I mean, all day long. I'm going to put an alert on it right now. I already know exactly what I'm going to be doing tomorrow. We gap down, crush city. We gap up, we're probably going to start working our way. And that's a good resistance. God dang, that was a good That was a good trade up there on the Qs. I didn't look at the Qs at all today. I mainly trade the SPY, but 375 area was such a good resistance. Here, let's back trade this a little. Do we have time? Sure, we've got time. I haven't looked at the Qs today. Let me get a water. Throw it losing it. All right. One thing I know for certain, if this is what it looked like, I knew we had a resistance there, and I know we have the 20 EMA up there. Okay, go back to the 5-minute. Fast forward this thing. This green line up here is that, was it the green line? Was that the resistance? The one I just put on there? I think so. Okay, so nice drop. Now we're just kind of chilling. Ooh, okay, so what I see now is a strong channel moving up. I would wait for that channel to break down. Once that channel breaks down, that's my short trigger. Yeah, I'm still waiting on the channel to break down. That's literally my SPY short. That's all I did on the SPY short today. This is a great resistance level. I'm pretty sure we broke down on that channel, by the way. I'll just draw the dumb line. We did. So one more move higher, I'd probably start getting in right now. I'd start legging into puts right now. Woo! I'd have been stopped out of my puts right there. Now I draw the next channel. That one would have been a loser. So now I draw that and I wait for it to close below that and I try it again. No close yet. There's my close. A little bit of a retest. Come on, Qs, you jerk. Oh, you jerk. I don't think I would have shorted that. I needed a little bit of a retest. And that's why I don't trade the Qs. But you have a left shoulder ahead, a right shoulder. We just broke down. This is probably my short right there. Right where it's at. That's literally the same exact thing we just did on the SPY. And hey, it's bouncing. See what I'm saying? Take your money and run, because you would not be profitable at the moment. Well, you'd barely be up, which is actually kind of crazy. You see a 10 EMA bearish entry. Yeah, I'm telling you, gap down is going to be some serious selling tomorrow. Whew, we gap down is going to really do some work. I mean, SPY will go straight to 444 tomorrow is like a 90% chance. Stephen, no, because that's guessing. What you want to do is you want to wait for it to gap down. Once it gaps down, now you have an idea of where it's going. If you guess and it gaps up, now you just lost money for no reason. Right? That's the difference. You don't want to guess which way this thing's going. You want to let the markets tell you which way it's going. Sit back and wait, and the markets will tell you exactly where they're going to go, and then you can make money. You'll lose money when you keep guessing where they're going to go, because this could gap up to here tomorrow. It could gap up huge. I doubt it, but it could. So if it does gap up tomorrow, I know how I'm going to play it. I mean, this thing is going straight to that 10 EMA. We're going to 450. So instead of me trying to guess which thing is going to happen, I can just sit back and let the markets tell me. If we gap down tomorrow, I know how to play it. It's going to 444. If we gap up tomorrow, we're going to 453. That right there will just increase your win rate by a ton. You've got to get it out of your head of missing out on money. Oh, like you see the potential. If this thing gaps down, it's going to be crazy. And so you're like, I'll buy puts. What you're trying to do is not miss out on any money. You see, there is an opportunity, but you can't let the opportunity turn into fact. In your brain, your brain is going, this is fact. It's not. It's not fact. It's fact when it actually happens. You don't want to guess, right? That's how you get crushed. And that's why you just lose all the time. And so when you finally guess right, it's like, cool, but I've already guessed wrong 10 other times, right? You want to actually have an edge. Don't just guess, but have an edge. And an edge is a gap down tomorrow, super bearish, lots of bulls trapped. There's my edge. My edge is it's going lower. Right now, I don't have an edge. I don't know if we're going to go higher or lower. I'm leaning to the bear side because we've broken certain things that are telling me it's bearish. But that doesn't mean it's going to go bearish, right? A gap down tomorrow, I have my edge. We're going bearish. High probability, I should say this, high probability we're going bearish. We gap up tomorrow, high probability the bears get squeezed and we go up to 453. Makes sense? So I don't have to guess. The market will tell me exactly how to make money. The markets will give me my edge, and then I just need to trade it. Really happy I just followed my plan. At the end of the day, my friends, do not play, again, it's not a guessing game. I'm not going to guess and be like, well, let's hope it goes lower at the end of the day. That'd be awesome. I could make so much money. No, I told the stock what to do. The stock didn't listen. I wanted this thing to be way down here by the time we had 10 minutes left, so that if we did bounce, I'd be really profitable and not have to worry about giving it up. Right? Do you connect the bullish retest gap from 712 with the bearish gap and going 8-2 when you're reading price action, or no, when you're reading daily price action on gaps? I mean, for me, it's kind of more of an overall picture, I guess, but you could put them together. Yeah, you could. So if we go back here to, you're talking 712, got to go back a ways. Right here, this retest gap, right? For me, a gap is really only valid for like a couple days. That's all I really look at for me personally. The main thing is the next day and what happens. Now this candle is now telling me something. Then we gapped up. My sentiment is almost a day by day thing. It's not that we've had a gap up, so this is super bullish. It's like, well, we had a gap up, but if we had a gap right back down the next day, it doesn't matter how much we had a gap up, right? That'd be an island reversal. That would be bearish. So this is already old news to me. This has played out. Now, the fact that we continue to gap up, you can string things together, but I'm not looking too much here. All I'm looking here is there's a good chance we're going to try to fill that gap. And then we're going to bounce back up, and we're probably heading right back up to fill this gap right here. I think we're going to do a little head and shoulders. Left shoulder, head. Right shoulder, neckline. That's what I think. So I think this thing's going to tank. It's going to get bought up because the buy the dippers are in full force. I think we're going to come all the way up to this resistance, which also happens to be that gap fill. Again, this is all just hypothetical, right? I have no idea what's going to happen. We might gap down and just never look back. I don't know. We might gap up and not. Again, this is my job is not to predict. Don't predict. My job is to have a game plan. Like I said, if we gap up tomorrow, I know how to play it. We gap down tomorrow, I know how to play it. I've got a game plan. I'm not here to predict what's about to happen. I just have a game plan that sets me up to have an edge, right? So I could see this play out, but tomorrow we could gap up and rampage and I'm like, well, that was cool, Tony, right? It doesn't matter. I don't care about being right or wrong on what I think is going to happen. What matters the most is I have a game plan for every scenario. Inside candle tomorrow, I'm not touching it. Not worth trading. If we don't gap outside the range, don't trade it. It's going to be choppy and ridiculous and not worth it. If we gap down, we're going to flood lower. We gap up, I imagine we probably squeeze some bears up to the 10 EMA and see what happens. I think we'll really struggle to get up above 451.60 though, honestly. That's kind of what I'm thinking. All right. So 100%. Make money being wrong all day long. As long as you're losing small when you're wrong and winning big when you're right. What most people do is the exact opposite. By the way, make sure and close out of your options before this thing ends. Close out of it. Don't be like, oh, I'll just let it lose. No, close out of your 450 strike puts right now. Don't let it finish. Okay. Hopefully you closed out of it. How long has it been since SPY touched the 50? It's been like, I think I was 14 years old. I'm pretty sure was the last time the SPY touched the 50. Seriously though, it's been like, it's been crazy long. 6 months. I don't know. May, it's been a while and a half, but we are way up there, way up there. You want to learn how to trade options? Hit me up, message me on Slack, email me. Tony at reallifetrading.com is my email. We had a fun options trade. It was a hoot and a quarter, but if you guys want to know some more information, you can do here. I've made it convenient. I'll type it in right now. Visit this. It'll tell you my story. It'll give you free courses. And also, if you want to learn how to read price action, Tracy's here to teach you some volume, because really that's the only two things you need in life: price action and volume. And teach you how to do credit spreads, teach you how to trade options. It's all there. So one-stop shop. If not, hit us up on YouTube, because I'm pretty sure every question you have, we have a YouTube video for it. So